Welcome in, folks. It's a three-piece here today. Three videos up for me to react to. First one up, Nvidia stock is absolutely parabolic. They are inches away from taking over Microsoft as becoming the biggest company in the world. I want to hear this analyst explain why he believes Nvidia is going to $1,500. Now, Nvidia is about to do a stock split. So basically, this is a call on Nvidia after the stock split going to $150 a share, which is a considerable upside from where the stock is right now. So we'll speak about that. I want to react to that. Then we're going to get into this video in regards to Tesla. Expect negative revisions from Tesla. Looking forward to getting to that one, reacting to that one. And then last one up here, Ron Barron speaking about Elon Musk and Tesla in general. Looking forward to getting into that one in this video here today. Appreciate y'all joining me as always. All I ask in return, hit that like button down there. It takes less than 3 seconds, and make sure you're subscribed to the channel. 45,500 plus subscribers strong now at this point in time. Alrighty guys, let's get into Nvidia.
On Nvidia, it's already been a huge year for the stock, obviously. Shares, though, up over 130% so far just in 2024, surpassing that $1,000 milestone for the first time a few weeks ago, and just this morning hitting another record high. But it hasn't just been this year, right? Nvidia's dominance sending shares skyrocketing over 500% in the last 2 years. Take a look at that extreme climb there, and that coming as investors double down on AI hype. All of Nvidia's momentum leading to a lot of bullishness across Wall Street. Bank of America becoming the latest, hiking their price target on Nvidia this week from $1,320 to $1,500. This is now the highest call on Wall Street for the chip giant. The analyst behind the call, Vivek Arya, is Bank of America's senior semiconductor analyst, and he joins us now. Vivek, thank you so much for being here with us to talk about your bullish call on Nvidia. I'm curious, why 1,500? Why not doubling your price target on this name, considering the amount of bullishness and the fundamentals that back it up?
Sure. Good morning. Thank you for having me. So I think there are two aspects to it. The first is where we are in the cycle of converting data centers to accelerated computing, right? The concept of the data center is not new. It's been around since the 1940s. But then we have these multi-decade infrastructure upgrade cycles from the mainframe to the microcomputer to cloud computing. And now we are at the start of what I think would be a decade-long conversion over to accelerated computing. What is accelerated computing? It's a way of taking a lot of very intensive data processing tasks that have to do with images, with voice, with video, with the processing of these large language models, and converting the data center with new kinds of semiconductors to make sure that processing can be done very efficiently. We are just at the start of this cycle. We think that the spending could be anywhere between $250 to $500 billion a year, and Nvidia is leading the charge. And I know there is often this comparison to, let's compare it to Intel of the past, or let's compare it to Cisco of the past, or other parts of the technology upgrade cycles. But what is different is that Nvidia is bringing a combination of silicon, of systems, of networking, of software, of developers, and that is unprecedented. So to come to your question, technology stocks, the price targets really move because of the size of the market, because of their execution. And even at this $1,500, the stock would essentially be trading at 1 times their earnings growth rate. If you look at the S&P 500, it's trading at 2 times their earnings growth rate. So I would claim that even at this kind of price level, it's actually trading below where the broader market is in terms of the price to earnings to growth ratio.
High target on the street for you, Vivek, for Nvidia. What is the significance that you see in deals like the one that...
Let me say this, okay? I'm shocked. I'm absolutely shocked that that's the highest price target on the street. Somebody needs to have a $2,000 price target on this, right? I was calling this out for 6+ months ago, talking about Nvidia in this cycle, before it's all said and done, is going to go to $1,500 to $2,000, right? And which once the split happens, that'll be $150 to $200, right? And then I think it will likely peak. There'll likely be, you'll see a major slowing in the business. There'll be, customers won't order as much. Then AMD will actually start seeming like more of an actual competitive threat by that point in time, which they really haven't up until this point in time, right? And then you'll get more of these big techs to create some of their own custom chips. And then you'll see kind of like demand weaken overall. And then long-term demand's going to be there for Nvidia, right? Long-term, the business is going to be there, but these businesses go through cycles. They go through very hot, like 3 to 5 year chip cycles, right? We're in year 2 of that chip cycle, so likely next year will be another great year for Nvidia in regards to this chip cycle. And then maybe 2026 or 2027, they start to see a pretty nice slowdown. Now, the stock will have topped way before that, though. That's an important thing to understand. The stock price will top probably minimum 6 months, if not 9 to 12 months before the business actually tops. So it's important to understand kind of, these stocks price things in the future that's going to happen, right? So, but yeah, shocked. I mean, crazy that no one has a $2,000 price target on this stock. It just seems like it should peak.
That is being reported this morning. XAI
$2K.
potentially going to be taking the chips that Tesla was supposed to be getting from Nvidia here.
Yeah, I think there is a race going on between technology companies of various types. We have seen that across the cloud players, who have raised their capital spending forecast to over 40 to 45% growth. Last year, we were thinking that growth would be 20%. It's already 40 to 45%. There is a race between these different technology companies to be the first to support the next large language model, to make sure that they are the destination of choice for a lot of startups who are trying to really kickstart their own generative AI applications. And then this market is broadening from these cloud service provider to a lot of enterprise verticals. And in this most recent quarter, NVIDIA did call out that automotive and automotive customers, which I assume includes Tesla, are part of that really large, vertical. So we see this spreading from cloud customers towards automotive, towards healthcare. A lot of drug discovery is being done with this infrastructure. Financial services are benefiting from it. And then the last but not least part that we will start to see more is the rise of this infrastructure among sovereign, right? So we have seen India, Europe, Japan, every country and region, the Middle East, they are trying to make sure that they're able to use their culture, their language, to really go and train these large language models. And we think we are just at the start of and that could be a really large infrastructure upgrade cycle as well.
Vivek, you mentioned customers, and it makes me think about Intel's latest chip announcement, and the executives really speaking about this idea that their chips are not necessarily for the hyperscalers. They're for more of the enterprise customers. They're going to be a little bit more affordable. To what extent do you see that as a winning strategy for Intel moving forward, particularly given the amount of headwinds facing that stock over the course of the past year here?
Sure, absolutely. I think we have to give Intel the credit that they have very strong enterprise incumbency. They are the brand name, one of the most trusted names in enterprise infrastructure. But broadly speaking, Intel is facing this challenge where they have been behind in AI. They have the incumbency, but they don't quite have the deployed base, the range of software developers. So, for example, NVIDIA has 5 million developers on their CUDA platform. So a lot of the enterprises, as they start to look towards their AI infrastructure, the first name they turn to is NVIDIA, for the reason that there's a lot of developers who are already familiar with NVIDIA's infrastructure. And number two, as these enterprises start to scale out, they look towards cloud instances. And that too is where they find a lot of NVIDIA-based instances. So broadly speaking, if I look at the overall AI chip market today, we think it's about $100 billion or so this year. NVIDIA is about 80% of that. Custom chips from Broadcom, Marvell, and others are another 10 or 15%. And then you have this long tail, which has AMD, which has Intel, which has a number of startups. And even as I look forward over the next 3 to 5 years, as this market doubles or triples from here, we think that ratio will stay relatively in that range, that NVIDIA will continue to have 80%. We think custom chips will have another 10 or 15%, and then you'll continue to have this long tail of companies that have a presence. They benefit from the rising tide in this market, but they're never quite able to achieve the escape velocity that the leader in the market has. And by the way, that is not too uncommon. If you look at other parts of technology, search, social, e-commerce, operating systems, you see the leader that has the early start, that has the scale, the incumbency, the relationship with developers, claiming 80+% of the market. And we see exactly the same thing in the AI chip market as well.
Yeah, trying to expect Intel to be any sort of major competitive threat here, or thinking like that's the play, like Intel's really underperformed, Nvidia's done great, so I could get outperformance, I can get some alpha in playing Intel instead of playing Nvidia. It's the same thought process as thinking like Jack in the Box is going to outperform McDonald's moving forward, or it's the same thought process of thinking like, oh gosh, I don't know, back in 2012, that BlackBerry was going to outperform Apple because Apple got to the smartphone first, but BlackBerry will play catch up, and look how that worked out, right? Like it's just ridiculous. It's just ridiculous. Like Intel's been a serial disappointing company over and over again, and Nvidia's been continually an outperforming company. And so if you want to play anything in the space, you got to play the big dog. You got to play the winner chicken dinner, and that is Nvidia, right?
So what would change that?
It's either you got to play that or you got to play nothing in regards to the chip space.
Dynamic moving forward, Vivek, and I would love to get your answer on that in the context of some of the cloud providers that are trying to compete with NVIDIA. I was just in Amazon's chips lab, AWS's chips lab last week, taking a look at some chips that they have coming out here, and I'm curious what you think would make some of the cloud players like an Amazon a formidable opponent to NVIDIA.
No, absolutely. I think we have to look at the cloud service providers as in some way competing with NVIDIA, but even more so being very strong customers for the company. Developing chips and developing cloud infrastructure are two different skill sets, right? So if I'm developing a custom chip in a cloud, only that cloud can use it. It's not going to scale, any chip that Amazon develops. It's not going to be used by Google. It's not going to be used by Microsoft. It's not going to be used by Oracle or Meta. So in some ways, it is serving a very specific need that, Amazon might have. Similarly, the chips that Google develops, the TPUs, they serve very specific needs.
Very good.
What NVIDIA has developed is a so-called, merchant, reconfigurable, programmable infrastructure that can be deployed across a very wide range of workloads, both for when these cloud companies are handling internal workloads, such as search, such as e-commerce, such as YouTube or, TikTok, like video recommender engines, or when it is serving a lot of enterprise customers through their public cloud. Which is why I mentioned that if you, take a step back and look at the broader accelerated computing market, I do think that 10 to 15% will be these custom chips, but they will have several different custom chips, across each of these specific cloud infrastructure. But because they don't quite have a way to go from one cloud to another cloud, their range of workloads, their applicability, their scale tends to be limited to just that cloud infrastructure.
Yeah, a lot of people are very confused in regards to this. They hear about Amazon's developing chips and Meta's developing chips and Google's developing chips, right? And they get very confused and they think basically, they think these companies are going to create their own chips that basically they're not going to have a need for NVIDIA chips anymore moving forward. And that's just not reality, right? If that was the case, it would already have happened by now, right? Now, what this could do is hurt NVIDIA's growth rates longer term if these companies come out with their own chipsets and these particular chips help with their custom cloud, so maybe they don't have to order as many NVIDIA chips in the future, right? So that's something that's a little longer term of a fear. When I say longer term, I'm really talking about 2026, 2027, 2028, those sorts of years in the future, and maybe they aren't as reliant on NVIDIA at that particular time, right? I'm sure they're still going to be ordering and still going to be doing a lot of business with NVIDIA, but they're just not as reliant. Now, that's an interesting time period on where maybe you potentially see some sequential quarter over quarter actually declines in revenue. By that time, NVIDIA stock will have already started a major downtrend, right? Which is why there's a decent probability that NVIDIA stock price could top. I would say, if I had to put odds on it, I would say probability is NVIDIA, if we're thinking about a 5-year top in the stock price, probably happens this year or maybe next year. And then you'll probably go through kind of a slow trickle downward cycle for NVIDIA for a few years, right? And then you'll start the next upward cycle, but then it takes a while to get back to where it previously was, right? And so, then NVIDIA could actually potentially become a dead money stock for potentially several years. And it happens. I mean, the next stock we're about to get into, Tesla. Tesla's been dead money for years, right? When's Tesla get back to $300 to $400 a share? We'll speak about that right now, right? We'll speak about when Tesla gets back to where it used to be, $300 to $400 a share, right? By the way, I made some changes with 1000xstocks.com here. Let me know what you guys think about this. But basically, the way I'm laying everything out now is starting out with trailing 12-month PE, then going into forward PE, and then 2-year forward PE, which not a lot of services really cover that particular metric. Then from there, going into trailing 12-month earnings per share growth, current year earnings per share growth, expected earnings per share growth, right? And then next year, EPS growth, excuse me, right? And so focusing on kind of the EPS there, then going into revenue, trailing 12-month revenue growth, current year expected revenue growth, next year revenue growth, then going into the margins, gross margin, net margin, trailing 12-month price to sales ratio, forward price to sales ratio, and then getting into some more very advanced metrics, like even, for instance, like 2-year stack. Like no one's really showing 2-year stack expected earnings per share growth in some of these sorts of metrics. 2-year stack expected revenue growth, like no one's really covering those sorts of things, right? So I thought that would be some cool metrics. And even like the 2-year out forward P, like services could provide that, but I don't see anybody really doing it. So I'm like, that's something I think is valuable out there. But anyway, some changes that I made to 1000xstocks.com. If you want to apply for access to that, go to 1000xstocks.com, and once you get in the product, we'll send you your Steel membership card in the mail, okay? Whew, thing's a beast. You can keep it in your wallet. If you ever need to protect yourself, you just throw it at somebody. Yeah, I mean, it's a good defense mechanism. All right, let's get into Tesla, my Tesla.
Growth rate is dipping, according to Cox Automotive. It says first quarter sales rose 2.6% year over year, but that was far below the 46% growth seen in 2023. My next guest sees a few themes at play here, including China, hybrids, pricing, in what he is calling an EV winter. Joining us now for more is Dan Levy, Senior Autos Analyst at Barclays. Dan, welcome. Good to have you with us. Is the EV market globally too beholden to government policy? In other words, subsidies on the one hand and penalties on the other for cars that don't live up to certain emissions or mileage standards?
Tyler, thank you so much for having me. Look, when we think about what's driving EV penetration, the analogy we've used is, carrots, sticks, and tambourines, right? How do you get a donkey to move? Carrots, sticks, and tambourines. How do you drive EV penetration? Carrots, sticks, and tambourines. The carrots and the sticks are government. And so for the foreseeable future, government is going to play a very critical role in driving that uptake. Certainly from the carrots, whatever incentive subsidies, but also from the regulations. And that's just not going away. Even if it's slowing or it gets pushed out, there is still a regulatory mandate in places like the US and Europe especially.
Do you expect that some of those regulatory mandates having to do with the kinds of cars new cars that can or will be sold in this country by 2035 will be changed? It's hard for me to believe that ultimately no internal combustion engine automobiles, new ones, will be sold in this country in 10 years.
The regulations are definitely fluid, right? We saw that already with EPA plans that were initially put out last year and already revised modestly lower earlier this year. We know that if in November Trump is elected, those regulations probably get softened as well. And certainly anything beyond 2030 is more aspirational more than anything else. So it's going to be fluid. There's a balance between pushing for decarbonization, but also recognizing where consumers are and where automakers are in this journey and the cost considerations for them.
I just want to talk for a moment, Dan, about Tesla losing share. You're seeing it in China, you're seeing it in Europe, you're even seeing it in the US. Where does that leave the stock?
Yeah.
Tesla losing share.
Year-to-date 2024 EV penetration on a global basis, 19%. So they're basing off of 1 quarter? Because we haven't even been through, I don't even think the numbers are out for the second quarter yet.
In China, you're seeing it in Europe.
In terms of
you're even
total
seeing it
for
in
everybody.
the US. Where does that leave the stock?
Yeah, the fundamentals for Tesla are in a tricky position right now, and we generally expect negative revisions.
They can't be out. We're still in June. They can't be out yet. So that's just
part of that
whatever.
is the volume outlook has certainly come down. We're at flat volume this year, and even that, some people would say is going to be tough to achieve. And next year, it's modest volume growth. I think part of the challenge here is that they are relying very heavily on Model 3 and Y, and as good product as they are, there is a model concentration challenge.
Right.
The U.S., it's natural that they're going to see some share erosion, just given how strong a share position they're at, roughly half the market. That's just a function of lack of competition. But Europe and especially China are very competitive. So they'll remain a leader on the EV front, but the competition is tougher, and they have a bit of a model concentration challenge.
Model concentration, I just don't agree with any of this, just to be quite frank. I think Tesla's doing just fine with the 3 and the Y out there in the marketplace. And I think they'll continue to, right? Cybertruck, obviously ramping volume next year. I think it's going to be massive for this company. A lot bigger than a lot of folks anticipate. Let's get into this one. Ron Barron on supporting Elon Musk's pay package.
On Musk and Tesla, the markets, and much more. We want to welcome billionaire investor Ron.
Well, there's no doubt China is a whole different ballgame. China's market's ridiculously competitive. They've got a lot of really good vehicles at really attractive pricing in China that you just don't really see in Europe, and you certainly don't see in the United States overall.
Barron Capital, the chairman and CEO there. And Ron, it's always great to see you. Thank you for coming in today.
Judy said don't use the word billionaire.
You didn't. You didn't. Unfortunately, we did, because we have to call it like it is.
All right, multi-billionaire. Fine.
Yeah, okay. There you go.
So before we talk about this, I just want to know, did you guys see over the weekend the article on the front page of the New York Times? Do you read the New York Times at all?
No.
Yes, I do.
So passing by a newsstand, you could have seen
needles in my eyes.
You could have seen it, and basically it was talking about how Elon has brought the internet, broadband, satellite to the Amazon in Brazil. Where's the Amazon? People don't have clothes, and now they have the Amazon. Now they have the internet. Unbelievable what he's done. Unbelievable, changing the world.
Yeah, but have you heard the other part of that story yet? Oh, have you guys heard the other part of the story? So supposedly, obviously, I don't live in this remote Amazon tribe in Brazil, right? And it supposedly is 2,000 people in there, okay? And so he brought internet to these folks, okay? And supposedly, what I heard, word on the street, is now these individuals in this tribe are now addicted to the P word, and they're also addicted to social media. And supposedly, the older folks in the tribe say the younger folks are now getting extremely lazy, and they use some word about they're learning the white man's ways or something like that. And so, yeah, it was. I don't want to go into more detail than that, but it was very negative overall from what I heard. And so, internet, it has a lot of good things, but it could also bring some bad things along with it, like many other things in life. And so, yeah, that's a whole situation. If you want to look further into that whole thing, you can look further into it.
A big deal in Ukraine, too, on the war front. Hey, before we jump into what you think about Tesla and the pay package, whether you're going to vote in support of that, why don't we talk about how much you own? Because I was looking, and it looks like I've known you've been a very long time holder. Some of your funds own 2.7%, 3%, 2.8%.
And the funny thing is, like hearing that story, I couldn't disagree with it. They'd be addicted to the P word, and then also them, using social media and getting more divisive and getting lazier. I heard that, and I'm like, I could believe that. You know what I mean? Like I'm like, that probably sounds about right. Like they got internet, and then that happened to them. Like, that makes about sense.
And the Barron Partners Fund is almost 30% long position in Tesla. So you are a massive shareholder.
It's also $13 cost. So, so we've owned it since 2014, 2016. Between 2014, so I met him in 2010. Mm-hmm. 2014 to 16, it took me 4 years. He said, what took you so long? 2014 to 16, we invested $400 million, made about $5 billion at the peak. Now we made about $4 billion, sold about a quarter of our stock 3 years ago.
How much do you hold now, though, in total? How many shares?
I don't remember the number, but it's a big percentage of our assets. It's 7 or 8% of our assets in total.
So what do you think about this pay package? This is a pay package that shareholders approved once this Delaware judge has overturned it, and now it's going back to the shareholders again. How will you vote your shares?
We're voting for the package. But before I talk about that, there's 3 things I want to discuss with you today. Number 1 is contracts, of course. Then I want to talk about Elon's ecosystem, all the different things he's doing. And then Elon, I want to talk about that, what he's accomplished. So about the contract. So first of all, he was, when we started, these numbers are pretty cool. Then when we started, when I met him in 2010, they were doing 2,000 cars a year. And then in 2014, it was 31,000 cars. That's when we started buying. In 2016, 76,000 cars. And last year, 1.8 million. So significant growth. And he made promises if he met these metrics of EBITDA, of revenues, of market cap, that he would get this extraordinary compensation. And the compensation, when he started, when the contract was signed, it was the company's market value was $53 billion. Mm-hmm. It got as high as $1 trillion. And it's now $550 billion. I think in the next 10 years, we're probably going to make 4 or 5 times our money again in Tesla. So he's created tremendous wealth for people, and he was paid, if this contract is enforced, which I think it should be, he's paid $56 billion. So it's like winning the lottery, if you, and Joe was talking about before, you win the lottery, you don't tell someone, oh, I'm sorry, you won so much money, you have to give it back.
I remember thinking at the time that the compensation deal was a crazy setup, but I also remember thinking at the time that I never thought he'd hit any of the metrics.
No one
He's
did.
hit every one of the metrics. So it's hard to imagine taking that back and clawing it back.
Exactly. And so that's exactly how we viewed it. I said, man, if he hits this is fantastic. We're going to do so well. And again, he should have another contract going from this point going forward, where it's incented the same way, I'm hoping.
See, this is the difference between people like myself or Ron Barron or just people that invested prior to 2020 in Tesla, right? We made so much money off this stock, and we okayed the pay package before. We were fine with that, right? And so to take it back down, we're like, why? But then you got the 2020 after crowd, right? Which those folks haven't made any money on Tesla. Those folks, if anything, they've probably lost money on Tesla, unless they happen to buy the great dip that was in the end of 2022 into the beginning of 2023. Almost everybody else has lost money on Tesla if you invested, post 2020, right? And so those folks are looking at it and they're like, why is Elon going to get this big pay package when I haven't even made any money on this stock, or I potentially lost money on this stock, right? And I understand their point of view. It makes sense. I get it. But I also understand, people like myself, Ron Barron, or others that invested before 2020, and we made so much money off the stock, and we're like, it was agreed upon before. Why shouldn't he get the deal, right?
So number one, the contract. So 73% in 2018, 73% of the investors approved it. All of the disinterested parties who are directors, they approved it. And the people he has who are directors, these are not, flakes. They are Larry Ellison, one of the wealthiest men in the world, Hiro Mizuno. He was the head of the Japanese, pension fund, the largest pension fund in the world, $1.5 trillion. Kathleen Thomas, Walgreens, Boots. So he had really, and of course, Robin Denholm, who came later. But they all approved this, and they all thought this was a fair, fair agreement. So basically, number one, all the disinterested directors approved it. Number two, that's the will of the company. The will of the company and the will of the shareholders. So I think he should be, it's a legally binding contract. And then who sued? You had an individual who was a shareholder for hire with 9 shares. 9 shares sued. And it took him 5 years to get the derivative suit certified, but class action wasn't, so he doesn't really represent all the shareholders. And the lawyer who represented them, when you talk about getting lucky, he has applied to the court for payment of $5.6 billion. $5.6 billion. And then he is asking for the payment to be made in shares of Tesla stock, which are depressed because of this lawsuit. It's crazy. So I think that, it's really unfair the way they're addressing this, and I think that he earned it, and he deserves it, and he should be paid it.
You've said for a long time, when we've asked you what your biggest concern about Tesla would be, is the key man theory, that so much is riding on Elon Musk being there. If he's not there, you don't think the company is worth the same. So what do you think happens if this package is not approved? What will Elon do?
I can't see inside of his mind, but I know that he has created tremendous value for everyone. I know he has a big stake in Tesla. But when I started in business in 1970, one of the people who really helped me at the very beginning of my career was Jay Pritzker. He's Tom Pritzker's dad, and he's the founder of Hyatt. And we were talking about arrangements, and he said, Ron, if you need to have a contract, then you're doing business you're doing business with the wrong person. You can't rely on a contract to do business, and you have to. He's a handshake guy. So if I say I'm going to do something, I do something. We said as Tesla as a company, Elon, if you perform, this is what you're going to get. How are you going to go back and renege on that, especially when all the directors and all the shareholders approve it? It's crazy.
100%, yeah, right on in regards to that. So, I don't really have any more to add in regards to that situation. I already kind of shared my opinion overall, okay? Appreciate you guys joining me as always. Thanks so much for being here. If you are looking to apply for access for 1000xstocks.com, you can go to 1000xstocks.com and go ahead and apply. I'll put that as my pinned comment down there today, along with maybe my Patreon, in case you want to support my content through Patreon. Much love and have a great day.